I'm here today with Besa Deda, the Chief Economist from St George Bank. Thank you very much for coming in.
Thank you.
Besa has been very kind to come in and see the team today and educate them about the Australian economy, where we are at the moment and where we're going. So just briefly, how do you think the economy looks for small business in Australia?
Well, the Australian economy has started to recover, and it underwent a recovery since the latter part of last year. It is a gradual and slow recovery. It is quite patchy. We are in the midst of a transition from one where the economy has been driven by mining investment, and now with mining investment having peaked, we are transitioning to an economy that needs to be driven more by the non-mining economy. In terms of business confidence, the latest measures do show that businesses are more optimistic about the outlook. Business conditions are starting to improve, or at least they're higher than what they were a year ago. And there are some encouraging signs around non-mining businesses spending a bit more. We do need to see a little bit more on that front, however, and I think Reserve Bank Governor Stevens had quite a good description earlier this week when he said for some businesses they're just waiting for someone else to be doing something. Interest rates are very low, they're at a record low, so they are providing support to the economy and also support to the gradual recovery that's coming.
Great. What about the Australian dollar? What's the outcome of that with small business?
The Australian dollar is holding its head well above the 90 US cent level, and that is more problematic, I guess, for trade-exposed industries. The Reserve Bank, I think, would like the Aussie dollar to be sub 90 US cents and provide a bit more stimulus to the economy. But the Aussie dollar is benefiting from the carry trade. So there are very low interest rates in a lot of the advanced world. And so it is quite favourable for many investors to be funding in a low interest rate economy and investing in a higher yielding economy like Australia. And I think that is providing support to the Australian dollar. Commodity prices are softening, but at the same time, you've got a ramp up in export production that is providing a little bit of an offset. So we think that the Aussie dollar will be well supported above 90 US cents, but over a longer time frame it will start to come under pressure because the terms of trade is easing. And the terms of trade is the ratio of export prices to import prices, and typically when that's coming off over the medium term to long term, that does put downward pressure on the Aussie dollar.
And how long can we expect to see the Aussie dollar sitting around about 90 cents for?
Yes, I think the Aussie dollar will finish 93 US cents at the end of this year, and it'll finish at 90 US cents at the end of next year. I think you'll see the Aussie dollar come under greater pressure once the US Federal Reserve starts to raise interest rates, because then that might be the period where the US dollar is at risk of strengthening more. At the moment, the US Federal Reserve is cutting back on its bond buying program, otherwise known as quantitative easing, and that's expected to conclude in October of this year. But we're not expecting the Federal Reserve to start raising rates until the middle of next year.
Great. Well, thank you very much for coming in and meeting with the Lene Templeton team today, and we wish you all the best in the future.
Thanks very much.